Good evening, everyone. Time for another silver update. This is the blog, and I just wanted to start off with a quick plug for a ad that I've added, which is Sherry Brescia's Great Taste, No Pain, which I had some acid reflux at one point and did a lot of research trying to find out what causes it, and looked at all the allopathic doctors and all that stuff, and I got on her newsletter list, and I just find her to be very informative about health issues, diet related. And so I've added that, and you can click on that, and it's very interesting what you learn about food and what doctors don't tell you, because doctors really are pretty much interested in selling drugs or selling surgery. So that's a new sponsor, and go ahead and click that if you're interested. Now, the issues that are going on, I want to start off by issuing an apology to both Raw Dog and to Dawn Harold. I should not have implied or said that they were paid shills. I have no idea uh, if that's true or not. I don't know what their motivations are, and really, to tell you the truth, I don't really care. But I should not have said that. That was unchristian of me, and I apologize, Dawn and Raw Dog. Now, back to the issue. I think Dawn Harold has put out. I really don't have time to deal with all this because I'm doing so many other things, but I think Dawn Harold has put out a video now about a debate challenge or something. I haven't watched it, and I watched the one he did. That's I'm going to address a little bit about some bad calls that I made supposedly and calling me out. But I'm really not interested in getting in a big brouhaha with these guys. I just wanted to say, first of all, that I only go after people who attack other people. I've gone after Don Harold a number of times. I'm not at all obsessed with him. I really could care less. But when he attacks the silver community, or when he attacks someone in the silver community, like he attacked Mike Maloney, who I really think is a above board stand up guy, then yes, I'm going to come back and I'm going to say something. So now, this is Don's channel here, and this is the thing about the debate. I'm not going to debate him. I'll tell you, first reason why here is I'm going to type in here as a response here, and you can see here comments may be held for upload or approval. So I have no respect for that at all. I believe in free speech. I believe in letting people debate. You can come on my channel, and if as long as you don't use profanity and follow simple guidelines, I don't have a problem with anybody saying whatever they want. Last night's video has a couple, 200-300 comments on it. I don't really care. So that's one thing. The other thing is these guys deleting their channels and remaking their channels and deleting history and stuff like that. I'm open to any interview. I've interviewed with a lot of people. People have asked me for my interview. I've never turned down an interview with anyone. And Don, I don't think Don's openly asked me for an interview, but I wouldn't do an interview with Don just because I wouldn't feel comfortable with the way that he has acted. But I'm perfectly open to do all kinds of interviews. Anybody who wants to interview me is welcome. Now, I'm going to drop that issue, except for I'm going to address some of the things that Don said in some of his analysis about my supposed calls about Bitcoin and silver and gold. And that's going to be the main thing I'm going to talk about. But before I do that, I want to jump over to the question of the night, and that's from Pasture Profit. Very good question. He's talking about dealer stock inventory numbers. Really enjoy your analysis, Brother John. You seem to put a lot of faith in dealer stock inventory numbers. Do you believe that dealers show their real numbers all the time? If you have millions of dollars in a commodity that you needed to hedge and maintain predictable margins, you would definitely withhold inventory during violent price swings. It is impossible to hedge your bets when the price is moving so fast. This would seem especially true on low margin junk and high margin rare coins. In order to maintain a predictable profit margin while using hedges, you have to have a predictable price instead of a violent one. That is why they withhold inventory. I enjoy your commentary about dealer inventories, but I don't agree with how you portray its relevance to the point you're making. Would like to hear your opinion. So That's an excellent question, and I'm going to return to this, but I wanted to go over to APMEC's site, and what was so interesting was that if you remember, there were 189 of these 2-ounce dragons. Now they dropped to 50 or something, or 80. I checked them again, and then I came back this evening and checked them, and they were up to 450. So either they got more in or they added more. I don't know what happened. Now they're down to 352. So 98 have gone since then. So I really don't know the answer to that. Now, back to that point, it's very interesting because if you remember when the MF Global thing came out, I was speculating about the motive behind what happened, and one of the things that I really had to think about was that these silver dealers, what I'd been told is that they hedge themselves in the paper market, and it makes sense. The way, with the violent price declines, and of course the violent declines and violent rises in silver, which are more than any other commodity by far. And then the fact that MF Global basically stealing all the money of the people who are in the futures markets, what impact does that have to these dealers' ability to hedge? How do they hedge? And of course, that was MF Global, that was Lynn Waldock, that was one of the largest futures operators, and they just basically outright stole everybody's money. So it's crazy when you think about it, how these people are going to protect themselves from these paper declines, and how are they going to hedge themselves, especially when the futures market is now something that you can't trust. So a very good point that he makes. Maybe they do withhold inventory during violent price swings, but what do they do on sustained declines? For example, this is quite a long period of time here. This is the bottom in 2008. That was a good month, 2-3 months. You're not going to be able to just withhold your inventory for the whole time. If you have a coin shop, you're not just going to close the doors when the price is low. So very interesting. If there's anybody out there who is a coin dealer, I know Jason Hommel is, so I'd be very interested in finding out how the physical sellers of silver actually do hedge their inventory and protect themselves from these price declines. Now, of course, as a stacker, I and you probably as well are looking to get buys below what they bought it for. We want them to sell to us at a loss and make their money on the hedge somewhere else. So we're always looking for the lowest price. That's the nature of a market. The seller's trying to get the best price he can, and the buyer's trying to get the best price, the lowest price they can. So very interesting. Now, on to the issue about what Don said in his video about my calls. Now, I think he brought up silver, gold, and bitcoins or something like that. Now, I've brought up this silver chart to show you that this rise in silver that we've had, I've been recommending silver. Now, my channel hasn't been around with videos the whole time, but I have been buying and recommending silver since early 2000s, even late 90s, and so I've been consistent on that. There's no way for me to prove that, but I haven't pulled any videos, deleted people's comments. There are a couple of people who have been banned from my channel for profanity and for just spam. But other than that, all my videos are still there, and there's a record of what I've said. You can go and look at it if you want to. But the point of bringing this chart up is that there are always price declines. Now, you can pick a point here, and the Wall Street analysts will do that. They frequently do that with the stock market. They'll always pick about 1979 or 1980 when the Dow was under 1,000, and then they'll start from there. And of course, it all depends on the point you pick. If you pick gold in 1979, then you've got losses for years and years and years. So clearly silver is in a bull market, and my call, if you pick, I've recommended buying it the whole way. And now if you pick a point, one of these tops, and say that I was recommending buying silver at that time, which I have been recommending buying silver the whole time, and have been. I told you before in videos that I've done that I used to buy breakouts, now I buy dips. That's just a preference, but it's stacking either way. But you can always pick a point in any market and then do your analysis from there. Same thing with the Bitcoins. The chart on Bitcoin you can see has gone from, I don't know how low it was, if it was a fraction of a penny. I know at one point it was a penny, and it ran to above $30. What's the percentage return on that? I don't know. But we're around $6 or $7 right now. You can see the MACD is starting to cross over. I don't know if it's going to rally from here and take out the old highs, but it is trading like one of the .com stocks did that actually succeeded, a Cisco, a Microsoft. At least that's the chart pattern that we see. And from 1 cent to $7 or $6, I don't know. You do the math. So again, it all depends on where you pick in the chart. And if we look at a gold chart, you can see that a lot of the analysts pick gold when they want to make gold look bad. They pick 1979 as their starting point, and you can see it didn't break through that price. So if they want to say that gold is a dead, worthless metal, then obviously they're going to pick that point. Now they could also go back and pick $35 at the beginning of the 70s up to 1800, and you could say, well, gold's been in a bull market for going on 40 years. So it's all a game of where you pick to start, and that's how the numbers are cooked. Like I said, with the stock index, the Dow Jones, I don't know if it goes back far enough. You can see with the Dow Jones Industrial, like I said, they always love to pick about here in 1979, and they'll tell you that stocks are always great, stocks are always a winner. Now, if you pick about 1998, then you can see that we're about to the same price. So if we go from 1998 to the present, that's 14 years of dead money. So again, these issues are how you set them up. The longer your timeline, obviously, the more accurate it's going to be. If we take a long timeline here, you've got about 1,000 on the Dow to about 12,000. So that's a 12-fold return. If you take gold at roughly the same time period, and it was $35, it's now around 1,600. So that is maybe a 40-fold return, more than a 40 to 50-fold return. Silver back in the 70s at the beginning of the bull market for commodities at the same time frame. I don't remember what the price was. I think it was as low as, let's see, this is $5, and so maybe $1, something like that. So with today's price, that's a 26-fold return over that period of time. So I think when you look at the silver chart here, you can see that relative to gold, silver would be undervalued if you're talking about the previous price spike. So those are the main points. Now, I'm not going to get into a big debate with Don Harold, and I'm not going to get into a big debate with Raw Dog. I don't really know why they do what they do. Like I said, I don't really care why they do what they do. But if they come out and attack someone in the silver community and they say something that I think is false, then yes, I'm going to counter them, and I'm going to counter their arguments. But again, I apologize for calling people paid shills. That was wrong of me, and I don't know why they do what they do. More power to them if that's what they think is going to be successful. I don't really see how that's going to be successful. I think the most successful thing to do is just share as much knowledge that you possibly can, and try to educate people and help them. And that's the late Bob Chapman. I think that's what he did, and obviously he was very successful at that. And that's the type of person that I seek to emulate. And we'll talk to you next time.